Good morning, everybody. This is the live market open for Friday. It's Good Friday, January 15th. I'm Yohay Elam, a Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Today's January 15th. It's not a very important day on the normal calendar, but 1 year ago today, we had the S&P bomb. Swiss National Bank decided to remove the floor under Euro Swiss, and this, of course, caused big turmoil in markets, big turmoil also for the Forex industry. Okay, let's see if we have anything special today. Anyway, as usual, we'll talk about the recent developments in markets, charts and levels, next 24 hours, and of course, your questions. Yesterday, we had a lot of questions, and I'm very glad for that. I see already a few of you in the chat. If you cannot see the chat alongside the video, please go to the address here on the screen, tlk.io/fxstreet-forex-live-video. Okay, what did we have yesterday? Let's begin from the top. We had the UK MPC, that's the Monetary Policy Committee, that's the Bank of England, basically voting to, as expected, no changes, 8 members against the change, and 1 member, Ian McCafferty, is still voting for a rate hike, okay? So that wasn't a dovish shift. In addition, the meeting minutes themselves revealed sort of a balanced picture. This was more or less unchanged. So in this case, no news was good news for the pound. The pound had a small rise from, let's take a look at that. The pound, well, it's basically in the same place, but when we had the news coming out, it rose from 143.80 to 142, 144.20, 144.40. That was, of course, short-lived because the general mood in markets didn't change. It just didn't become worse for the pound. Okay, that was the big event for the day, and it turned out into not such a big event. I was live with Valeria Bidnarik of FX Street in Mauricio, Carrillo, and we expected a bit more action. In terms of U.S. indicators, yesterday we had U.S. jobless claims miss expectations. They rose to above 280, but import prices fell less than expected, so it was better than expected over there. All in all, not so important. Today we have much more important U.S. figures. Okay, and yesterday we had also 2 conflicting stories from the ECB. First of all, during the morning after the show, we had a Reuters report telling us that the ECB basically is done, that they're not going to act anymore, that they've already made their moves, they cannot do anymore, that governments need to do more. We don't know exactly where this came from, but I can suspect it comes from this big country in the middle of Europe between Poland and France, but perhaps some other members as well. But anyway, this is sort of the more hawkish stance. Then we had the ECB minutes. They're a bit stale, that's right, from December, not as fresh as the Reuters report, but they, as we know from Draghi as well, they left the door open. But everything depends on inflation, on sustained low inflation, if they'll do more. Okay, so my conclusion from all of this is that the bar is relatively high for action from the ECB, but the door is still open. Okay, so we still have a chance to see the European Central Bank act, not next week, not on January 21st, but in its March meeting in early March. Okay, so all in all, if we look at Eurodollar, it rocked the boat just a bit, but the general picture. Let's take a look at Eurodollar. I think it's about where we stood yesterday. So we had a rise a bit on the Reuters report, which came first, and then a fall maybe on the ECB meeting minutes. But all in all, we're basically in the same range. This morning, we're seeing the Eurodollar slide just a bit, but the range is minimal. I guess markets are waiting for US news, and also Eurodollar has been relatively narrow. Okay, so this morning we have a range of just under 50 pips. Not so impressive, okay? But we do have movement elsewhere. More from the Eurozone, and this is related. Renault, maybe I'm not pronouncing it correctly, but the French car maker is also in trouble. Like VW, like Volkswagen, they're also suspected that they did some cheating in pollution. Sounds similar to Volkswagen, to VW. The French authorities raided the offices of Renault. Renault took a positive spin on that. They said that the French authorities are investigating many cars, and the fact that they checked 25 models of Renault out of 100, it means that Renault has a big market share. So they took a positive spin on that, and they didn't refer to the cheating allegations. But anyway, the stock did react. It did tumble down, and also other stocks of car makers fell. Peugeot in France, BMW in Germany, and maybe others, because remember when we had the Volkswagen crisis, the other car companies didn't really speak out against VW. I guess not everybody. The auto industry is not all angels, let's put it this way. Okay. Anyway, for the euro, what does it mean for the euro? Well, it didn't do much yesterday, but it adds to the bad mood in markets. Bad mood in markets means a stronger euro. As we explained, the euro has become a funding currency, and in times of troubles, money is repatriated. It's a safe haven. Even if the trouble comes from home, in this case, the second largest economy, France, and one of the important companies there, Renault. Beforehand, we had the same from VW, one of the biggest car makers in the world. So from Germany, from the continent's largest country. So yeah. Comment from Ryan here: would be really funny if the cops were driving Renaults. Yeah. You never know with these kind of things. Sometimes reality is funnier than any joke you try to make up. Anyway, let's move on. We had also James Bullard from the St. Louis Fed from the United States speaking in Memphis. He remains optimistic. He remains bullish. He's a voting member this year, so his comments are more meaningful. He remained optimistic. He mentioned inflation as the worry, so that's a bit cautious. Remember that a year and a half ago, James Bullard, when stock markets were falling in October 2014, he suggested continuing QE for a bit longer. Okay, so he is very attentive to stock markets. He wasn't that extreme this time, but remember, but markets took his warning about inflation as sort of worry about sort of lower chances for rate hike in March. As we can see, these are the implied probabilities for rate hike in March. I'll try to refresh it to see if we have a fresh figure, but I've been following this for a few days. It's hardly been moving, but it is grinding every day a bit higher in this bar, the 0.50 bar. That means there are growing chances for no hike in March, okay? It was under 50%, and now it's closer to 60% of no hike. It's a small move. Of course, we can have an excellent NFP, and we can have good figures today, and everything can change. All right, but during this week, we're seeing lower chances of a move there. Comments here. Should have bought some Renault stock yesterday morning. Or do you think it will decline further? I don't know. I don't follow the stocks very closely, but if you're trading stocks of car makers, you should be aware that sometimes there are bad news, but these could also provide buying opportunities. But I really don't follow that closely. The USA started extorting money from banks with allegations of laundering, and they hit the car industry. Banks like a good way to hit the stock price when buying. Yeah, as I said, it could also serve as a buy opportunity. And there is, of course, this political issue of who makes the cars and who makes the allegations. In the case of Renault, it's a French car maker, and it's been raided by the French authorities. So it's not USA vs Europe or something like that. At least not in this case. You cannot say that. Let's look at more at currency. So euro dollar is back to range after a small move higher yesterday. Pound dollar also leaning lower after an attempt to make to rise yesterday. 143.65, I would say, or 143.50. Let's put it this way: support. 144.50 is resistance. Dollar yen also had some better atmosphere yesterday. Yesterday we had US stock markets rising. Today we have Chinese stock markets falling. So dollar yen is the most sensitive to stock markets. We had it rise to resistance here at 118.30. You can maybe see here a lower high for dollar yen. Now we're back to the lower range. 117.30 is support. Dollar CAD, one of the big movers, and especially this morning. So yesterday we had a break above 143.10 to, no, sorry, that was earlier this week. We had it capped a bit under 144 yesterday, and now a fresh move to higher ground. 145.30 is the high, okay? Already reached the target, I think, of Morgan Stanley. Extreme move in the Canadian dollar. A bit of doing catch up with oil prices, because oil prices, they already dipped under $30, both Brent and WTI. Currently they're above $30, but the recent slide that we had in the past few hours, closer to $30. This time it triggered a much bigger reaction in the Canadian dollar. Canadian dollar was relatively stable earlier in the week, thanks also to a good jobs report. There is speculation. Next week we have a rate decision in Canada, and there's speculation about a rate cut over there. Okay. Aussie dollar, sort of in dire straits. 69.23 at the moment. It fell under the 69.40 line, shattered it. It's no longer significant support. We can delete this line. It was a very nice double bottom, but it's gone. 69 is the new support line, and 60 and 70. So I would say the round numbers now define the range, but the tendency is to the downside. Falling stock market in China, and even though the Australian economy is doing well with the okay jobs report, the third beat of expectations in jobs, the Australian dollar still seems weak. Kiwi dollar following along, finding some support over there at 64.25 more or less, but also suffering because of China, not because of its fundamentals. All right. Yeah, let's see, we have a comment. Pound is oversold. Yeah, it can go further down, but I think that pound dollar is consolidating in range. Okay, so if it continues consolidating for some time, maybe making a very minor correction, and then it could be ready for fresh falls. And next week we have critical inflation and wage data in the United Kingdom. But yeah, so maybe this kind of consolidation is enough to sort of move away the oversold conditions and allow it to fall further. Let's see if it stabilizes here. Yesterday, I think it was a bit oversold. Now it's slightly oversold. Let's put it this way. It depends on the mood in markets. Let's on British data. Another comment here: France always in collusion, just like they were with Germany some years back. No, well, Germany and France are the sort of the central part of the European Union. They moved the European Union together in recent years. Sometimes they work better together, sometimes not so well. So it's not always, these two big countries are not always on a collision course. I see oil reaching even $20. Yeah, more and more institutions, more and more analysts talk about $20 for oil. Great time to buy up your competitors' equipment, at least for steel. Bravo Bush family in the background with the Bin Laden family still trading. Yeah, lots of dirty stuff in the oil industry. I think now there's just too much supply and not enough demand. We might see more bankruptcies. Already US production is beginning to slide, while Middle Eastern production isn't. Let's see if it reaches the bottom. The peak, according to some reports, was in April 2015. Now we might be seeing the peak was 9.7 million barrels per day in the United States. Now it's closer to 9, and it could fall to, according to some speculation, to 8.5, and that could maybe be a bottom over there. Currently, oil prices, as we speak, 30.21. We had each time that WTI and Brent dipped under 30, it was very, very short-lived. It was sort of stop hunting, okay? So let's see if we find some stabilization in oil prices or not. Okay. See here another question. Let me just draw this line of 30 to make it round. Okay. Great trading. Yeah, dollar index, because if it goes up, euro dollar goes down. Is there something similar to the euro? Determine strength or weakness in the euro? Is something for the pound? No, I'm not aware of any such a basket. The US dollar index, I know that Dale Pinkert analyzes it and trades it a lot. I think it's, if you want advice about dollar index, he's the guy at the afternoon show. Afternoon here in Europe, morning in the United States. We're currently above the 200 SMA on an hourly chart on euro dollar, which indicates the start of an uptrend, though we are also currently above the 200 simple moving average and the hourly chart dollar index. I'm not sure it's correct. Euro dollar has been extremely choppy. I took it out of my list of most predictable currencies, just too many moving parts this quarter. So if I take a broader picture of euro dollar, okay, I see lots of choppiness. I don't see a clear direction. I see a sort of neutral stance, a wait and see mode. We have the ECB ready to act on one hand or not. We have safe haven currencies, safe haven flows. Currently, it's been relatively stable. You can argue here for an uptrend, or you can argue for a downtrend. I don't see a clear direction. Russia to start trading oil futures and that their exchange for rubles, slowly easing away from. Yeah, I think, but Russia is not such a huge producer, and the Russian ruble is not the most important currency. If you would tell me that, I don't know, China began using the Chinese yuan, or that quite many countries would choose the euro as a currency for oil, that would make a big difference. But Russia is not I mean, it's an important oil producer and an important political factor, but not that extremely strong. Okay, let's talk a bit about a few more currencies before we move to the events for today. We talked about, yeah, dollar Swiss above parity, but basically stuck to the euro. We did see some movement in euro Swiss yesterday, and we're still holding on to higher ground. Okay, so the Swiss National Bank said that they foresee a weaker franc, and they perhaps acted to do that. Okay, so we have a weaker franc against the euro. Maybe they're mitigating, encountering safe haven flows to the franc. Maybe they're remembering they want to the safe haven flows, and they remember their anniversary. 1 year ago today, they removed the cap. It was 120 for a very long time, and then we had this extreme move. Of course, 1 year anniversary doesn't mean anything. This is just a daily chart to remind you what we had in euro dollar in euro Swiss for quite some time. Here is the September 2011 when they set it, and then it traded 120, 124, got flat again, moved higher again, got closer and closer and closer to 120, until they said, you know what, we give up. Boom, we had this fall down. January 2015, extreme moves, a few Forex brokers were wiped out. Since then, we had it stabilizing, and in recent months, we had sort of unofficial support at 107.60. Currently, it's moving a bit higher again. They don't have a line in the sand to intervene, but they're clearly saying they're active in markets. Okay, looks like the euro comment here. Sit nowadays till the ECB meeting. Yeah, we could have euro dollar stuck in range until the ECB because it's only 6 days away. Russia pumps slightly more barrels than Saudi now. Yeah, Russian production, despite commentary about old infrastructure over there in the Russian Federation, some projects did come online last year, so production went up. I'm not sure about the numbers, but they do produce a lot. And of course, they're also contributing to the fall in oil prices, and they're not ready, of course, to lower production in any way. Okay, Euro Pound, one of also the currencies that made a move higher. Yesterday we had only a dead cat bounce in pound dollar. Euro remains stable. We're seeing it moving higher. 76.10. Real resistance awaits only on much higher ground. Well, not extremely higher, but I would say 77.40 is strong resistance because it served as support in, well, when was it? 2014. At the end of 2014, would say that support is more significant. Support for Euro Pound is right here at this number of 75. Right, okay, because it was a top here and the top here, and also a very round number. Euro yen, the safe haven currency. Let's go back to the hourly chart. Found its balance around 128, very much hugging 128, 127 to 128. 70, I would say, is the range, but both the euro and the yen are safe haven currencies and they move together. So to confirm, there is no index for euro. Perhaps there is, but I'm not aware of it. I'll try to search for information on that, but the most common index is the dollar index. There might be some artificial basket of currencies, but I'm not aware of that. Question here about Aussie dollar. 69 good support. Yes, 69 is good support for the Aussie. We're currently close to these levels. The low for today has been 69.14, and 69, of course, is a round number, and it also served as support in the past. Yeah, chat with Dale later. Dale is an expert on the dollar index and an expert in Forex in general. Okay, great guy as well. So that's the Aussie. Let's pound yen, Gepi, very, very clear downtrend, collapse, crash, whatever you want to call it. Currently at 169, not real support anymore. I would say 169, the round number, provides some kind of support here. But if we have more gloom and doom, we could have more falls in this pair as well. The pound is a risk currency until proven otherwise, and the yen is the most significant safe haven currency. Okay, let's take a look at oil. If we're already here, we're about to fall under $30 once again in WTI crude oil. 30.05 is the low for today. All right. Let's talk about events for today. Today the focus, well, there's one UK figure, UK construction output. It's a second or third tier one. Let's see what we're expecting. I expect little. Let's refresh here. It's the FX trade calendar, of course, on Forex Crunch. It's been quite a busy week. Yeah, we don't have this figure here. Anyway, we have trade balance in the Eurozone as well. It doesn't always have a big impact. The focus today is on US releases. Okay, so first and foremost, we have US retail sales. There's the headline figure, and there's the core figure and the control group. The focus is usually on the month-over-month figures, even though, of course, the bigger picture is the year-over-year. So we're expecting on excluding autos, that's the first one here, rise of 0.2 after 0.4. Remember, it's seasonally adjusted. That means that they take into account the Christmas sales and things like that. The retail control group, perhaps the most important one, the sort of core of the core, is expected to rise by 0.3 after 0.6. The headline figure, which could be less important, is expected to remain flat. Okay. In general, the US consumer has been a bit disappointing despite the fall in oil prices, despite the rising wages a bit higher. Consumers in the United States have been relatively cautious, and everybody, including the Fed, everybody's still waiting for them to awaken. Okay, the shopper awakens. Maybe it's a film for next year, hopefully this year, but it's moving really, really slowly. At the same time, we have also producer prices. They're overshadowed by the retail sales, but it's still an inflation figure, and the Fed now is more sensitive to inflation than it used to be. I see here a comment about inflation. With inflation being threatened by oil prices and this impacting the 2% rate hike and the 2% inflation target, yeah? We think that US may step in and somehow increase the price of oil. No, I don't think they'll deliberately increase the price of oil. They'll just want to raise prices, but not directly. Oh, the hawk that spoke yesterday was less hawkish than normal and was concerned about oil prices. Anything the US can do to raise prices? Well, they don't want necessarily higher oil prices. Of course, slightly higher oil will be better because, okay, it'll leave less money in the pockets of consumers, but it'll help the industry, the shale industry in the United States, one of the biggest factors for the fall in oil prices. Okay, so anyway, what they can do about oil prices? Well, not too much. The Fed cannot do much. It can either hope that with more wages and with falling oil prices, consumers will just buy more and raise prices of other stuff, or they can make a shift in their monetary policy and print more money, and this will raise all prices everywhere. Anyway, for producer prices, we're expecting a fall of 0.2 month over month after a rise of 0.3 last time, and excluding food and energy, a rise of 0.1, a bit overshadowed. Okay, what else do we have in the United States? We have Bill Dudley, number 3 at the Fed, the head of the they could help make peace in the Middle East. I don't think they've been so successful with trying to make peace in the Middle East in the past few decades. So I also hope for peace in the Middle East. I'm from there, from Israel, but yeah, it depends more on the countries there than on the United States. Anyway, Bill Dudley speaking at 2 GMT. He's number 3 at the Fed after, of course, Chair Yellen and Vice Chair Fisher. Let's see if he says anything interesting. Worries about inflation will be negative and optimism about jobs will be positive. He's very, very much in the center. So anything he says can move markets. At 2:15, we have the industrial output figures. Manufacturing in the United States and in other developed countries has been really poor. After a fall of 0.6, we're expecting a fall of 0.2. And last but not least, we have the CB economic index. And perhaps what could set the last tone is something that is not clearly correlated with consumption. In theory, it is. In practice, not exactly. Consumer confidence. Why is it important today? Because first of all, it's the preliminary figure for January, so it's very fresh. And it's sort of the bottom line, the last word for this week. Expecting a small rise from 92.6 to 93 points. It's at 3 GMT, and the last release for the week. It could sort of set the tone for the close, but remember that the reactions in markets are a bit mixed. So on one hand, if we have good figures from the United States, it's supposed to be good for the US dollar, but perhaps it means another Fed rate hike coming soon, which could be bad for the global economy, and this could stoke worries about China, about other countries, and this could strengthen the euro and the yen against the US dollar. So, as always, as in the past 2-3 weeks, a lot depends on the mood in markets more than indicators. We've seen that last week when we had the top tier indicators, the NFP and things like that. NFP was excellent. It was the dollar strengthened against all the other currencies, but that didn't last long, and the old trends returned: stronger euro, stronger yen, weaker commodity currencies. Okay, Speaking of commodity currencies, these are the figures once again. Oil is almost there. Aussie dollar fell to a new low as we speak, 69.08. Okay, it's the lowest in quite a long time. We don't see crash, but it's below the levels we've seen in recent days, close to the levels seen in September, which are the lowest levels in, I think, 5 or 6 years. Yeah, since 2009. Sorry, it's almost 7 years. Okay, so the Aussie dollar is on the verge. The lowest level was seen here in August when the Chinese stock market crashed in the previous round. So let's see if I can. Yeah, so the low is 69.07. Actually, we're almost there. Another push lower, and we could have the lowest levels in nearly 7 years. Okay, so the Aussie is on the verge. Just published on my website, Forex Crunch, analysis by Deutsche Bank, which says that the Aussie dollar is still overvalued. Let's see if they're right or wrong. Okay. Any questions? Yeah. What caused the massive spike yesterday? I asked Rand Squawk for more info, and they advised that there was a change in sentiment in yen safe haven, which was exacerbated by a closes the London fix. Well, the London fix always triggers more action, some kind of choppy movements, a change of sentiment. Yesterday there was a positive change in sentiment. U.S. stock markets did rise nicely for change, more positive atmosphere. Perhaps there were some attractive stocks, perhaps other things. So we did see some kind of recovery in stocks, a recovery in dollar yen, a slide in euro dollar, and some breathing space for commodity currencies. Okay, but this morning we're seeing we had another slide in the Chinese stock market. Okay, that's bad news, of course, for dollar yen, and so we have another change in sentiment. So yeah, yesterday around the London fix is when U.S. stock markets opened, and when the atmosphere became a bit more positive. Let's see if I have the closing figures for the Chinese stock market. Yeah, the Chinese stock market, the Shanghai Composite fell 3.5%, 2,900 points. Just following the general trends there, not providing here any technical analysis on that, but remember, it's one of the big influencers on the markets, what's going on in China, not only the Chinese stock market, but also the value of the Chinese yuan. All right, another question here. Why is gold recovering after it dropped again this week? What are the drivers of gold and what moves it in the past week? Well, what moves gold, the fundamentals of gold are of course demand from industry, and that's sort of demand from industry and from jewelry, but we also have speculation. When we have more trouble in the world, it's a bit more safe haven. I don't really think it makes sense, but that's how markets work, and you have to accept it. So when we have a better atmosphere, I think we have, like yesterday we had in the US stock market, then gold is a bit less attractive. Really fell into a nice support here at 1070. And then now that sentiment is worse, we're seeing a rise in gold. Okay, and that's the recovery. That's the recovery we're seeing there. A few years ago, we had a much more speculative atmosphere in gold with all the QE, with fear of hyperinflation, with all the gold bugs running around. We had gold prices 90% higher than they are now, right? At the peak. Yeah. Okay. I think now we've reached some kind of better balance because gold prices reached a level where there's enough demand. We're probably going to see it eventually also in oil prices, that low prices trigger fresh demand. But at the moment, we're seeing relatively more narrow ranges in dollar terms. And what moves gold is mostly gold is also seen as some kind of a safe haven. Okay, in times of trouble, you go for the metal. Now, many of these inflows into gold are not really the doomsday people that buy physical gold and hide it under the mattress, but just speculation on paper gold. So it's not exactly like that. Why during this risk on last period kept going down? Yeah, again, it's not the safe haven currency like the yen, not like the euro. So also remember that one of the triggers for stronger price in gold was QE in the United States, and the Fed is still seen as continuing to hike. So there's not enough support for gold over there as well. Okay. Must say I'm not following gold prices very, very closely, but recently I've seen more and more questions, so I hope to get to you back next week with more detailed answers, but these are sort of the bigger movers of gold. Okay. Yeah, I mean, we're still risk off, which means euro and yen should still be the safe haven. Yeah, the yen more than the euro, all right? The yen is the classic safe haven. Look, it's falling more. It's pressured more. I think 115 is sort of a problematic line for the Bank of Japan, but the yen is a very veteran safe haven. Rates have been there at low levels forever, and the Bank of Japan is not seen as acting anytime soon, while the the central bank in the Eurozone, the European Central Bank, still has an open door. Sorry. US retail sales are expected to be higher after the holiday, so partially priced in. What figures do you think will significantly strengthen the US dollar? Well, yeah, of course, there's more shopping around Christmas. That's right. But it's this sort of Christmas spike is already priced in because it's seasonally adjusted. So you just have to look at the expectations on the calendar, and better than expected good news, worse than expected bad news. So we can look again at the figures. If you want the best one, maybe, but it's a bit complicated. But if you want to focus on one figure, it's the control group, because it's sort of the core of the core. So we're expecting 0.3. Of course, if it's flat or negative, it's terrible. And if it's higher than that, 0.5 or higher, it's good news. But we would have to see all the figures move in the same direction to have a bigger impact, all negative or all positive. And also remember, there are lots of revisions in retail sales, so we'd have to see insignificant revisions, or at least revisions going in the same direction would be even better. But if we have slightly better than expected but terrible revisions, it's bad news. So it's important to look not only on we have to have, of course, the latest figures are more important than the older ones, but also remember the revisions, and it's a bit mixed, okay? But if you want to focus on one figure, that could be confusing, but it's the latest control group, okay? Another question here. Don't expect euro to be like last year. It's Jacqueline Hyde. This year for sure and more dangerous. Yeah, because sometimes it forgets that it's a safe haven and it's worried about the ECB. And we have the debt crisis in Europe, and we have so many figures. We don't have time to talk about everything about that, but yeah, the euro is most of the time a safe haven. The yen is almost all the time, or all the time, okay? The hectic credit bubble that China have, looking for a bailout, and who has money to help them. Yeah, there is some speculation that because of the credit bubble in China, they steered this bubble to support themselves and to support the world in 2008, 2009, but it went a bit too far. Now there's speculation that they might introduce QE at some point. Okay, this is still a far out prediction, but it could certainly happen, and that means you could have a weaker Chinese yuan, higher stocks, higher commodities, depending on the scale. But let's talk about that when it becomes a bit more relevant. Yeah, lower leverage for euro trades, always in an environment of high volatility. It's important to have lower leverage. Okay, let's do the wrap up for the show and then preview for the events of next week. Okay, take a sip of water. So this is the wrap up for the live market open for January 15th, 2016, the 1-year anniversary for the S&P bomb that rocked markets and industries. We don't expect any such huge events today, but markets are certainly volatile. We still have a risk-off atmosphere after a brief, or not so brief, improvement in sentiment yesterday. That means the yen is strengthening against the US dollar. Dollar yen 117.60 at the moment, support 117.30, and resistance 118.30. Euro dollar also sliding just a bit, but very narrow ranges. Lots of confusing data about the ECB yesterday. It keeps euro dollar tight in range. 108 is support, 109 is resistance, 109.50 further resistance, 110 further support, 107.10. Tension is rising towards the ECB. They could leave an open door, but there's lots of opposition there. Okay, we've heard yesterday from them. Pound dollar is mostly a risk off or risk currency in general. 143.80 is the current level. Leaning towards the downside, the Bank of England didn't rock the boat yesterday, and that allowed no news is good news for the pound. It allowed it to rise just a bit, but that was a dead cat bounce. All in all, we're seeing 143.50 to 144.80, but leaning more to the downside. Okay, dollar CAD made a very nice break this morning, above 144, even crossed the 145 line, reached 145.30 with a fresh slide in oil prices. Remember, oil prices didn't reach a new low, but the Canadian dollar is sort of playing catch up. It managed to hold its ground yesterday, but with the fall in the Chinese stock market today and the fresh fall in oil prices, CAD is falling even further. Aussie dollar also leaning to the downside, pressured by China, forgetting that the employment situation in Australia is quite good. 69.08, it's almost at the levels seen in August when the previous fall of the Chinese stock market. Currently a bit above this level. 69 is support, and if we fall there to these levels, we're back to levels last seen in March 2009, almost 7 years. So the Aussie is on the edge. All right. Kiwi dollar also sliding, but it's not on the edge. I mean, it's not on the verge of fresh lows because it has seen worse levels in August, but it's in the worst levels since in the past 2 months or so. 64.29, the low so far 64.16, 64 some support. The Kiwi is just getting carried away by China. Fundamentals in New Zealand are better. Okay, another thing to watch, if we talked about the S&P bomb, 109.36, it's a bit higher. I don't expect any big moves today just because it's the anniversary, but I think the Swiss National Bank is a bit more active, is a bit more worried. Okay, important to watch today. Oil price is 30.08. Another fall under 30 will not be the first fall, but will still be significant. And let's see if that happens. The big events from today come from the United States of America, with most important retail sales. Watch out especially for the control group. All right, but also the other figures. The biggest impact will come if all figures are positive with positive revisions, or if all figures are negative with negative revisions. We usually don't get that clarity. We usually get some kind of mixed picture. Also PPI and the Empire State Manufacturing Index, which is a third figure in this batch of releases at 1:30 GMT. If all of them move, of course, in the same direction, it's more impactful. I expect something a bit more mixed, hopefully US consumers, but a bit more. If not, it's more doom and gloom. It should be very, very interesting. First and foremost, retail sales with the control group, then PPI, then the Empire State Manufacturing Index. We know that manufacturing is bad, so a bad figure will not kill us. We have not mentioned here, but 2 GMT Bill Dudley speaking, 215 industrial output, expectations are low. And the last word belongs to consumer sentiment from the University of Michigan. The preliminary number for January expected to stay more of the same, but perhaps we'll have it fall lower. Contrary to the fall in oil prices, we have all these negative headlines about global growth, about terrorism, about things like that, and that could impact US consumers. In general, the mood remains risk-off, and that means stronger euro, stronger yen, weaker commodity currencies, but it's never a one-way street. These things, we have rock and roll everywhere. Okay, before we move to the preview for next week, a few comments here. Use less leverage when you trade the market. D. Pinkhurst, yes, certainly agree. Dale even has a song and he plays the guitar with that, and I could not agree more. Could you base a CPI prediction off a PPI result? Of course, there is correlation because producer prices feed into consumer prices, but it's not always a straightforward game because we know that producer prices are released before consumer prices, and the best economists in the world provide their predictions for CPI, and they also miss from time to time. So it gives a good indication. And core inflation, core CPI, which we'll have next week, is expected to stand around 1.9, but let's see how the PPI feeds in, and let's see if the actual result is correct. Dollar CAD had a good spike, but I never traded. I think the Canadian dollar has become more interesting. If you look at the bigger picture in CAD, it does have a technical picture. The recent trends, we're about to fall above under 30, and oil prices almost there. One more cent. Anyway, dollar CAD. If you look at the chart, it's not too shabby. It reaches, for example, here and here and here, reaches some kind of resistance, consolidates, trades in range, and then makes a break higher. So I'm not sure this trend will last forever, but in recent weeks, I don't think it's such a terrible pair in technical terms. So I wouldn't disregard it. If retail sales beat expectations, can we expect short euro dollar? In the short term, yes. But if they're really it's a huge positive surprise, that means the Fed could hike rates. That means markets don't like it, trouble for emerging markets, safe haven flows, and perhaps a stronger euro dollar. So it's not really a straightforward trade with euro dollar on US figures. Okay. Yeah. Okay. So now let's do the preview for next week's events. You already know what's the big event for the week, but Monday, first of all, it will be here, but it's a US holiday, so we'll have more movements according to the Chinese stock market, weekend news, oil prices, things like that. Less indicators doesn't mean less action. There's always action in recent weeks. On Tuesday, we have Chinese GDP figures. We know that the Chinese government more or less trying to find a nice word, but it's very unusual. I mean, it's hard to understand how they make up these numbers so fast in the first quarter when it's such a huge country, the world's second largest economy, and a very, very large country in general. Anyway, even if they invent the numbers, and even if nobody believes it, it certainly moves markets. UK inflation data also on Tuesday. It's important for the Bank of England. It's their mandate to have inflation between 1% to 3%, around 2%, and of course they're missing it because of oil prices. Let's see if at least core inflation rises. The pound is very sensitive to that. On Wednesday, we have employment data from the UK, not less important, especially wages, which are, of course, related to inflation and to employment. US inflation data, now that the Fed looks more closely at inflation, Let's see, especially core inflation, if it remains stable and solid close to 2%, or if it slips below. For those of you trading the Canadian dollar, it's a big day because we have the Canadian rate decision. There is some speculation of a rate cut. I'm not sure it'll happen now, but the Bank of Canada, the Bank of Canada could be happy with the fall in the Canadian dollar and not push CAD even lower for now. But you never know. Last year at this time, in their January decision, they surprised markets with the cut. It was one day before the ECB, and they surprised us. And the oil inventories, of course, also related. Also this year, they have on Thursday, it's all about the European Central Bank, the Draghi show. No changes expected in the interest rate and nothing in the QE program. The big question is, will they keep the door open for action in March or not? A struggle there between Mario Draghi and a few doves, and on the other hand, Jens Weidmann of the Bundesbank and a few hawks. The ECB has already done a lot, and governments need to do more. That's what they say all the time. Okay. But on the other hand, inflation fell more than expected, and that's even before the recent fall in oil prices. So, of course, we'll do a more detailed preview next week. And on Friday, it's not over. It's echoes from the ECB, of course, and UK retail sales. And for those of you trading the loonie, the week ends with a bang, with a double feature of Canadian inflation and retail sales to provide sort of the last word after all the other movements. So the third week of January begins maybe a bit slow with the vacation on Monday in the United States, but I think the ECB decision, any week that features the ECB, the Draghi show, is a very, very exciting week, in my opinion. Okay, that's it for the preview for next week. Yeah, I see no more questions. Anyway, I wish everybody a safe and successful trading day as always. I had a lot of fun. It was also very interesting for me to receive your questions this week. I think we had more questions than usual. As always, feedback is more than welcome. You want more technical stuff, more fundamental analysis, cover specific topics, longer show, shorter show, critics, positive stuff, negative stuff, everything is, of course, welcome. I see more last questions here before we head off. Can you recommend a good fundamental course or any books to help me understand fundamentals better? Regarding a course, I don't have one. The good book that I read, there's a good book I read recently. Let me try to find it. I don't have it right here. I'll bring it next week. Anyway, feedback can be sent to, the best thing is to send either through the contact form on Forex Crunch or to Mauricio. He's the best guy because he runs the show. He runs all the YouTube channel, all the live video channel for FX Street. So I guess he's not here now, but I'll ask him how he can be contacted. But I'm sure he's following the chat box as well. Regarding, you can look at Baby Pips for fundamentals. Thanks for the kind words, everybody. More fundamentals, all right. And I was also considering writing some kind of an ebook or doing something regarding fundamentals. But there's always too much going on in markets. So, fundamentals course. What kind of length of a course would you like to see? Anyway, we could of course focus more on fundamentals in general, and yeah, I guess lots of things to do. Anyway, thank you everybody for coming as usual. Have a happy Friday and a great weekend. I'm going on a short trip on Saturday, and I'll be here with fresh energy on Monday. We'll have an excitement as always with the Chinese stock market, which impacts currencies. Let's take one more look before heading off at Did oil fall under 30? Yes. So we have the last word from oil. 29.97 at the moment. 29.93 is the bottom. Dollar CAD is off the highs. Of course, the correlation is not always 100%, but it's very highly correlated. Okay, so that's enough for today. Thank you very much, everybody. Have a great day, and see you on Monday. Bye bye.